Hi folks, Nick here. Wanted to take a few minutes. We have a lot of new members and I'd like to, every once in a while, put out a video that helps the new members navigate whatever they see here as far as output from me with regards to levels specifically here. Every day, every Monday I publish a weekly preview of whatever levels I see, and this is not me being Karnak. It's me just looking into what the actual markets are expecting to trade the week. So I just read the tea leaves basically. It doesn't provide a forecast as to where it's going. It's more of I'm interested because I do credit spreads. I'm interested in where the market is not going to be in order for me to sell spreads. Okay, I'm going to use the SPX as an example, and this is it for this week. 4 days, it's a short week. We don't have Friday. However, this is the Monday open, and I like to every once in a while go back and look at how the preview on before the open on Monday that I put out with all the reviews as far as ranges are concerned, and see how they held up. Okay, so let me pull in the statement on the SPX specifically. Okay, here it is, and let me bring it into the picture. It'll eat up everything. All right, so here we go. Similar setup to last week. There's interest in 2050. Right away, I know that there's interest in 2050. Here's 2050. So we opened up the week high, and there's interest in 2050, straight down to 2050 through 1995. And 1995 through 2040, strong support area. So we knew that anything below 2050 is going to be support area. 1995 through 2040 is support area. And I also, standouts, I say 2025, 2000, just in case one breaks. There are several spikes in there that would have held up better than others. 2000 is a magnet, or at least was. They tried to get to it, but obviously hit the support areas, and selling was not as fierce, but it was a possibility. That means it's support on the way down and resistance on the way up. That's how those work. 2060 through 2075 is an area of upside pressure, meaning there was interest, enough bullish interest in it that we could have gone into it. And so the market's open, and this is before the market opened, by the way. It gets to you. The market opened, and where do we head? Straight into that area I was talking about. And in fact, I take it one step further. 2090 small resistance, and look at the high. Boom, 2090, almost to the dollar. Hits resistance. Then 2100 through 2115, each strong resistances. And then I say, okay, let's say these break down. We still have resistance here and more resistance higher. So the bulls had a decent setup. They did, especially in the small caps. These are not small caps. But they needed the headlines to cooperate, and maybe they did, maybe they didn't. Maybe how they interpreted the headlines, I don't know. There was also the quarterlies that expired. The quarterlies also showed defense at 2050, 2030, and 2000. They also showed resistance at 2075. So I provided a framework. So how do I use this information? If I was a credit spreader, and I do credit spreads, and I'm looking to do an SPX credit spread, I would know not to put any credit spreads that are not defended by levels. So if I wanted to do a bullish credit put spread, I knew not to place it right here, because I know that the resistance is likely to come below 2050, support, sorry, come below 2050. So if I wanted a successful credit spread, I would have had to step down below 2050, say 2020, 2025. I take any of these where I can still collect some premium. So that's one way of doing it. If I was bearish, I would hide behind the 2100 at least. So I would not want to be just at 2090. I want to give myself some room to be wrong. 2100, maybe even higher, 2110, 2120, and do a credit spread there. And I don't have to use the current week, the week that expires. I can use a week out, so to avoid the real danger of being blown out that week. So this is a, I did not review this before I pulled up both charts. I had confidence that the levels, just from memory, held up. And they do that week after week. The only time they don't is when you have a headline that is massive. and that we can't avoid. Nobody can succeed in those. And levels get tested hard. Recently, we've had major headlines, and even then, our levels held up nicely. So this is just an example, and I used the SPX for this. Okay, let's say you are playing with a smaller spread and you'd rather trade the SPY. So we go to the SPY, and I'm going to zoom in on the week itself. 3:30, that would be it. Okay, just the 1 week. That's Monday, Tuesday, Wednesday, and Thursday today. All right, so let me see here. Where is my note? Don't go magic. All right, so here's the SPY statement, okay? Anything lower than 205 on the SPY is pure and decent support each. So they opened, they ran, and they fell apart, and look at where they bounced. Here's 205. They're not hard lines. Think of it as a rubber band. They hit it. Okay, so anything lower, even though 205 had failed, there was support lower than that. No real resistance until 208. They opened, they run into 208 and passed it with one candle and then break down. So no real resistance until 208, and that worked out well. This leaves room to run for the bulls for about double of this morning's pop. So the morning pop was the pre-open. The 210 is another level of resistance. So we knew if the 208 failed, we knew there was another level of resistance. Let's see, I'm losing where I'm reading. 211, much stronger resistance. Anything higher is pure resistance. This optimism around, there is optimism around 215, meaning I saw some traders looking for 215, but I said would require a major headline, which we didn't get. The quarterly contracts, which expire middle of the week, showed strong defense and a push towards 208 for Monday and Tuesday, because that was just the quarterlies. 208 and higher was resistance even on the quarterly contracts. So we knew that 205 was going to hold up as support. We knew that 208 should hold up as small resistance, but if it failed, we had more at 210 and 211. We also knew that somebody was looking for 215, so not to be surprised. Every once in a blue moon, those wild guesses come to fruition, but haven't seen any recently. But I mentioned them anyway. Okay, so how do I use this? Again, here I've used some credit put spreads if I wanted to, but I make sure to make them lower than 205, as low as I can, and still collect a decent premium. What's a decent premium? I've discussed it in another video today. A decent premium is a setup that actually gives me a yield that fits my parameters. I like about 8% yield on the trade, so I don't push for a lot of premium. So on a dollar-wide trade, I'd like to collect 9-10 cents if I wanted to survive, and that's more than 8% in yield, and that's just in 1 week. So it is a market beater almost in 1.5 times, meaning all of last year the S&P gained 13%. Here I am trying to eke out, trying to squeeze out 10% in 1 week. If I can do it over and over or often enough, I will definitely beat the market long term. I can double my yield by stepping up and doing both ends of the trade, meaning I would do a credit put spread wherever I can find safety, and I can do a credit call spread if I can find safety, meaning I will short the market via a spread that is higher than, you guessed it, I'd like 211 because it's much stronger resistance at 210, and I would feel comfortable with that because it's an iron condor, meaning I have some defense on both sides. Yes, I have twice the chances of losing because I can lose on the way up, I can lose on the way down. However, if I see things moving, I can close both for about even any day, because if it moves one way, one gains, one loses, so it's kind of like a self-hedged trade. So then again, this is just using the levels, okay? This, I just 5-10 minutes of your time watching a video like this can remind you of how you can put these words into action and actually profit from them, because they are easy to use. And if you're unsure about any level, shoot me a question. No question goes unanswered here. Okay, in the interest of time, I'll switch to RUT to show you. The RUT was a pretty bullish setup, and the IWM, those are the small caps. This one, and that one. There's the small caps. Anything lower than 1230 is decent support. It did fall, but not past 1240, so they never got tested, even though I showed you the breakdown. Then I show you that there's resistance at 1260 to 1300. Guess where it closed? 1255 and change. Guess where it failed? Look at that. Could I have planned it any better? What is that? 1260 exactly. The high is 1259.97. I missed it by 3 cents. Okay. Again, I'm not Karnak. I'm just reading the tea leaves. And even then, I had backup. You know, there was any line above that between 1260 to 1300 was resistance. All right. So let's switch to the IWM. Again, here you could have done credit call spreads, credit put spreads, and double-ended them. So the IWM, this would be 4 days. All right, so switching back here. All right, what did I say on the IWM? I haven't even read it. 124, strong defensive level, and will exert pressure upwards this morning because we were lower, right? 124. Where is it? Okay, that's the 124. Will exert upward pressure. Went through 124. All right, so let's see here. No real resistance this week based on today's data at that point in time. So they have room to run if they want it. 121 is also decent support, right? So we knew that if 124 fails, we have 121 decent support, but we didn't even come close it. 120 even stronger. More support lower if we needed it. The quarterly contracts even more optimistic. So the bullish setup was there, and they failed to take advantage of it. I did not have any resistance to offer you. So in this case, I would avoid selling credit call spreads. So no credit call spreads when I don't have any visible support resistance. That's what I do. I don't take the chance if I don't see it. Okay, I'm going to see if we can find something in the Qs right here. Triple Qs. This is the 30th. This video is going a little bit longer than I wanted, but I'm getting excited here because this is a good lesson for the new people and the older member. Not older in age. Sorry, folks. Okay, the triple Qs, 104.5, 105, decent support. Right? When they fell apart, look at where they stopped. That's support. What is that? 104.5, 104.4. Yep. So I'd say that we nailed the support there. Strongest support is 104, so we knew that 104 would hold strong. So based on that statement alone, I would do a credit put spread just under 104 for the active trader for the week on the triple Qs, which are the NASDAQ. More support at 101. 106.5 and higher is small resistance each, and nothing much really. 106 and higher. What did I say? 106. 106.5 and higher. Okay. Look at that, 106.5 and a little bit higher. This is 107. So between 106 and 107, they failed. And then the quarterly said something about 107. Quarterly contracts show resistance at 107. Bang, right on. Okay, those were the Qs. Let's see if we can guess on the Apple. Now that's the tricky one because Apple is being manipulated these days, and if we can get Apple right, then we've done a good job. All right, so the Apple trade is right here. Let me move this up a little bit so you can see the Apple trade. Setup this week is not as bullish as the general markets. Anything higher than 124 is resistance. Anything higher than 124 is sure ran into resistance and then some. 115 through 122 small supports each. That held. And what else do we say? Some bearish setups, that's crazy, and 130 was crazy. Apple ran into the close, closed at 125.32. So anything higher than 124. So it went through the support resistance and closed about $1 higher than the start of resistance. But I've updated those for those of you in the premium channel to show that actually that 125 was the better resistance line than 124. The 124 bears retreated just after Monday action. All right, how about the Google? Could we get anything out of the Goog? This is 326.27. That's almost it. There we go. All right, Google. Oh, we're going to run out of room here. Nope, that doesn't help. Okay, Google support at 550. It obviously broke support today because it had a headline. Perfect example of how headlines mess up all the ranges. Okay, let's read the whole thing. Support at 550, smaller at 547 through 525 each. Some resistance is 555. So it got to 555 and it failed. And there was more resistance up higher. No need to read that. Stronger at 560, 565 through 575. So if I wanted to do a credit call spread, I would do it higher than the highest resistance level here. That still pays me that 8% yield on my dollars at risk. If you don't know what that means, message me. I can explain that all to you. But the good thing to know is that we had support at 525. That was the lower end of it. But this was a surprise candle right here because it's being sued, or there was word that I think the EU is getting ready to sue, basically sue Google over antitrust practices. And that usually causes like problems that last for years. So that was the goog. So obviously, even with the headline, we didn't completely fall apart, but we didn't completely nail it like the other ones. But that's a headline, and that's an example of how headlines mess up your setups. And that's why we leave room for error. So if I say 205, don't be going long at 205. You go long at 205 minus a buffer zone, say another $1 or $2 if you can get it. Okay? And if you can't, then you don't need to trade it. All right, this is Nick signing out. About 16-minute video, but I think well worth the effort.